Truth with your host, Dave Kranzler from investmentresearchdynamics.com and Rory Hall from the daily Coin.org. And today is Wednesday, May the 6th, 2015. And we've got just a couple of items to talk about today. And I wanted to reference an article that I'd written, some commentary about an article that Wolf Richter had done. And the global economy is coming to a halt is the name of the article that I wrote, which is a little misleading. It should be the global economy is slowing down dramatically. And the reason that I wrote this was about the Wolf Richter's article was discussing the Shanghai Containerized Freight Index. And this index measures the volume of containered freight that's coming out of Shanghai, which is the largest exporter in the world. These numbers have literally fallen off a cliff. Back 2 weeks ago, Wolf Richter had written an article where he had referenced where the SCFI, the Shanghai Containerized Freight Index, had plunged 14% from the prior week to $399 per 20-foot container equivalent unit, which was down 67% from a year ago, which was an all-time low. And now, as of the writing of this article, which was yesterday, May the 5th, it had plunged once again another 14%, and it was down to $343 per 20-foot container equivalent unit, which makes it down 68% from a year ago. And that's going from China to Europe trade, which I would have to believe that it's similar coming to the United States as well. And to me, that's an indication that things are just slowing way down, because that's a 2/3 drop in a year. And I'm not a mathematician, but it doesn't take a genius to figure that out. And to me, that is also an indication that channel stuffing is not even working, because if they had room, if they had storage capacity, they would order more products. So if they're not ordering more products, they have no room, they have nowhere to store these products. And if you look at the Baltic Dry Index, which Dave, you and I were hammering that thing a couple of months ago, with good reason, and it's fallen off a cliff again. It's starting a downtrend. It picked up just a little bit in March and April, but if you look at the first part of May, which is where we're at, you will see clearly that it is starting to fall once again. So you take those two in tandem with each other, and you can correct me, Dave, if I'm wrong, but I personally believe that these are two great indices that point to something is very, very wrong on a global scale.
Well, Rory, with all due respect, I think you're being politically correct here by saying the global economy is slowing down. It looks to me like it's falling off a cliff.
Well, okay.
I'm actually being serious here, because when you look at the container freight shipping index out of China, that thing is, that looks like an elevator plunging, an elevator with a broken cable plunging from the top of the Empire State Building.
It really does.
Just to put things in context here, China's the world's largest exporter. If they're not exporting, it's because there's not import demand for their goods, and their two largest sources of import demand are going to be Europe and the United States. And we saw in the trade balance numbers that were released the other day that the U.S. trade balance is widening out significantly again. And part of the it's just domestic demand in this country is plunging. And I just want to circle back just to sort of clarify now that the container freight index that you referenced from the Wolf Richter article, that measures freight volume, as opposed to the Baltic Dry Index, which measures the cost of shipping dry goods around the globe. So they're two slightly different metrics now, and I think the volume one is probably probably a little more relevant than the Baltic Dry. I wasn't aware of that China's containerized freight index until the Richter article, but it's the criticism about using the BDI as a measurement of whether or not the global economy has demand is that critics will say, well, you got an overcapacity of container ships being built, so they're dropping their prices so they can just use the capacity that they've built. And there is a little bit of legitimacy to that, but it also, if there's demand, they're not going to be able to, they don't have to lower their prices.
Right.
And so the fact that the index, the Chinese containerized freight index, measures volume, that tells you all you need to know. And that it to a large degree, it dismisses the overcapacity argument that gets lobbied at the BDI.
Well, the reason that I like referencing, and in particular in this particular situation, and once again, you can correct me if I'm wrong, but the Baltic Dry Index, as you stated, measures the lease rate for dry goods, dry product, raw materials, basically coming into manufacturing, right?
That's correct.
So if you're not having any raw materials coming in to be made into finished product, and you don't have any finished product going out, then I would say that those two have to work hand in glove, which is what they are at this point. Then you have a serious problem. That to me is an indication of a longer term problem. Or am I just wandering out in the weeds with that?
No, you're right. It is. If you use the containerized freight index, which measures volume in conjunction with the BDI, it basically tells you that the global economic demand is collapsing.
That was the conclusion that I reached. So thank you for confirming that for me. Seriously.
Well, I mean, again, it's collapsing, not just slowing down. I mean, it's falling off a cliff, and you're seeing that in a lot of the metrics that are released domestically, especially the non-governmental ones.
Now Friday we've got the unemployment coming out, and I think that you had written something getting ahead on that on the ADP. What's going on there?
Well, the ADP report came out today, and it missed the estimates in terms of how ADP measures payroll growth. It missed the estimates by a country mile. The number came in at something like 165,000 versus 205,000 was the expected number by Wall Street's Einstein Brain Trust. And they also revised down the March number by quite a bit, and they revised down February. So, I mean, part of that tells you that the integrity of ADP's data is questionable. However, what I do think we're going to see on Friday is, I think, as several people have recently pointed out, including my friend Mark Kellstrom, who I sort of co-authored a guest post by him earlier this week, or it was actually last week, where he had noticed that every May the BLS throws in a huge number for the birth-death model, and it's basically a plug. And what the birth-death model tries to assess is they try to estimate the number of jobs that are created by new businesses that have been formed during the month versus the jobs lost by businesses that went out of that closed during the month. And they're statistical estimates in an economy where there's growth, and it's probably not a bad estimate of jobs growth created by new businesses. But it's been proven, and there's been academic studies that have shown this, and I don't have time to dig them up, but I've seen them in the past, and I think the BLS even will admit this. I think you can find them admitting it on their website, that when economic growth is decelerating or declining, the birth-death model is just, it doesn't work. But they still use it because then politically it helps them create this great jobs report. And so I have a feeling that we're going to see a large beat of the estimate on Friday. and it will probably trigger a upside bedlam in the stock market. So, but again, the birth-death model is one of the it's probably one of the most unreliable statistical metrics that gets released by any organization.
It's basically an imaginary number, right?
Basically an imaginary number. And that's notwithstanding the fact that the jobs report itself is probably the most useless, statistically inconsistent, and unreliable, and most highly politicized number that's released by the government. That's that. But we're starting to see, more and more economic indicators just in this country that show that this country is starting to decelerate, not just decelerate quickly in terms of economic activity, but I think we're contracting. And in fact, because the trade deficit, the way they factor the trade deficit into the GDP, the trade deficit was just way bigger than anyone expected. It came in at like 51 billion. I think they were expecting like 39 billion or something. And so what will happen is that the GDP was reported to be 0.2% for Q1. When they issue the revision, they're going to have to factor in a growing trade deficit, and that's probably going to take the GDP for Q1 negative.
Do you think they'll actually release a negative number?
Yeah, I think they will, because I think there's probably some elements inside the government that understand what's going on, and they're going to try and stimulate the conversation for QE4.
Oh, okay. Well, that makes sense then, yes. And so they actually need that for their own benefit.
Yes. And then there was another interesting article that Zero Hedge posted today, and they had some interesting graphs. And the whole thesis of the article was why QE4 is probably going to happen. And they showed the correlation between plunging economic metrics and the direction of the Fed balance sheet. And the one that I pulled out of there that I think is interesting is the leading indicators, which is a metric that Alan Greenspan used to pay attention to. And I always, if I looked at the Fed heads over the last 50 years, I think Alan Greenspan was by far the brightest. And he used the leading indicators as one of his ingredients in his witch's brew, his monetary witch's brew. But you can see the leading indicators on this graph, it's just fallen off a cliff. And at the same time, it's sort of out of scale, but it makes the point about the Fed's assets have declined a little bit over the last call it 15, 16 months. And it shows the correlation between the leading indicators and the directional move of the Fed balance sheet. And the last two times the Fed balance sheet got down to the level where it is right now in terms of declining, they did QE, and it correlates with a plunge in the leading indicators and then a rise back up in leading indicators. So if you're one that thinks that QE4 is probably going to happen before an interest rate rise happens, like I do, this graph is sort of reinforces that view.
Now, you said that this had been falling for the past 15 or 16 months.
The Fed balance sheet, it's declined slightly.
Doesn't that 15 to 16 months, doesn't that correlate with about the time that Janet Yellen came into office?
Well, it also correlates with when QE3 was officially ended,
right.
Yeah.
So those are roughly around the same time.
The decline in the Fed balance sheet is not that large. It's the graph makes it look like it's bigger than it really is. Like I said, this graph isn't to scale. They did it to just show the correlation between the movement in economic metrics, various economic metrics. And the one that I thought was interesting was the leading indicators.
But Dave, didn't that idiot Fed head out of Atlanta say that they needed to raise interest rates?
Well,
or that other idiot Fed head, was he out of Kansas City?
Well, I went back and Zero Hedge exaggerated. They put up a fear porn headline. He didn't say expect a rate hike in September. What he said was a rate hike in June is highly unlikely and will probably be pushed off to later this year. And he didn't commit either way. As it turns out, I was getting ready to write an article about that, and then I investigated it a little bit more. And it turns out Lockhart is more of a centrist, and if you read everything that he said, I think he's probably getting a little bit worried about the economy. So I'm not sure that I would. Maybe the market interpreted it that way, and I think that was the gist of Zero Hedge's post. But he definitely did not indicate that there was going to be a rate hike in September. I think that's the way some people prefer to interpret it. But there's not going to be a rate hike in
No,
September.
I wrote an article, don't you remember? Because about 2 months ago about that, about him specifically, Lockhart. Thank you for reminding me of his name. He did about 2 months ago came out and basically said that he thought that if market indications kept moving in the same direction that they were moving, that we would need to go ahead and raise interest rates sooner than later.
Right. Now, he probably did say that 2 months ago, but the Zero Hedge headline that was on Zero Hedge today indicated that he said a rate hike in September. And if you go back and you read what he actually said, he gave a speech today at some economic club or something. And he said, it's highly unlikely that we'll get a rate hike in June, and it'll probably be sometime later in the year. And then Zero Hedge seized on that as to say that, Lockhart said we're raising in September, and he didn't say that. And if you read what his comments were, he's definitely he's hedging on whether or not there's real economic growth going on.
It's a definite maybe for him, huh?
Exactly.
Oh, okay. Well, is there anything else we need to cover here, Dave?
Nothing I can think of.
I think that's enough for now, and we'll pick it up on Friday when they release the latest imaginary numbers on the job growth, and see what they have to say.
It's like I like to say, there's no BS like BLS.
There you have it. Well, we'll pick it up on Friday, and I'll talk to you then.
See you then, Rory.
All right, bye-bye.